Everybody, it's Jim at SP500chart.com. It's a little bit before 8 o'clock on Sunday evening, the last day of July 2016. That's July 31st, and we're going to take a look at what happened in the S&P over the past week. After I remind you that the website and the video are for educational purposes only, nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, the week was flat. We opened the week around in the low 2170s, and we closed the week in the low 2170s. Last week we were up around the 2170s both on Wednesday and Friday, and that's where we are today. If we look at the weekly candle or a daily candle, you can see it here. There's our week right there. We're actually up a little bit for the week, but by so little I'm saying it's flat. So here you can see, coming off that sub 2000 level, we come almost straight up to a new all-time high, and we have spent 2.5 weeks essentially going sideways. Now, if we look at a 30-minute chart, there may be a little sign here that we may be flirting with breaking out from this range. And that is the fact that we did at least get over this trend line right here momentarily on Friday. But it didn't really hold. We closed back under that line by a little bit. So that sort of leads me to ask myself, are we looking at a trend line here that, if we take all of the points into consideration, maybe looks something more like that? And if so, we may be in the process of breaking out. However, one could also make the claim, because none of this lines up perfectly, that really we just came up to resistance again in the 2170s, the same place we hit back on the 20th, essentially, a little bit more, and we're poised now to fall at the outset of the week. I'm not prepared to say that, because this resistance line up here is not in stone. As a matter of fact, I sort of tend to think that this may be truer to what's going on than the one that's almost flat. And if you look at it, and let's get rid of this middle line here just for a second. If you look at this line and this line, they are describing what might be a very simple symmetrical triangle. And remember, let's do our little test, put our little midpoint line there. Unfortunately, in this particular case, that test does not help us in analyzing this pattern. However, we do know a couple of things. The first thing is, we know we have two inverted head and shoulders patterns that should be giving us some tailwinds to the upside. We have this smaller pattern right here that by itself has a target of about 2232. Then we have our much larger inverted head and shoulders pattern right here, is that's where we get our target of 2460. So guys, as you look at this week unfold, I hate to say it, there just really isn't that much to say. We essentially traded all week long inside of, what was our low of the week? 2159. Our high of the week, 2177. We never, for the last, actually for about the past 2 weeks, we have been within the same 1% range. With a low, I'm talking about 2 weeks now, with a low at 2159 and a high at 2176. Less than 1% for 2 solid weeks. That's kind of interesting. So guys, until we break out of that, there's just not that much to say. You can look at this chart and say, well, does this look like a symmetrical triangle to you? If so, could it be a bull flag? Is this the beginnings of a breakout that we saw on Friday where we got up, oh, maybe if this is the correct line, maybe we got up over that line and we just decided to back test it a couple times, started to rally back late in the day, but then because it's a weekend, what happens a lot of times, people just want to take their money off the table going into the weekend. So, guys, it's going to be short and sweet today. We've gone over everything many, many times. Those two inverted head and shoulders patterns should be the predominant driving forces. I don't think, for political reasons, I don't think that the markets are going to go into the fall in bad shape. I do not believe if there is any way those in power or those in the know, let's face it, Wall Street is, despite the fact that it's big money, let's be honest, Wall Street votes for Democrats. You would think because there's a lot of money they would be more Republican, but they're not. They have always supported Democrats. Donald Trump is an outsider. The weaker the markets are, the more ammunition the outsider will have to try to get into the White House. I don't think Wall Street wants that to happen. So guys, that's it. That's the video. Nothing really happened this week. Still going sideways. Let's see if we get a little bit of clarity on things tomorrow. I checked futures just a little while ago. Up very, very slightly. Haven't checked them in about 45 or 50 minutes. So that may have changed, but I'm not worried about that. Let's just see what the markets actually do tomorrow. And let's see if we get some buying to start off the month of August. So guys, it's going to be, like I said, short and sweet. That's your weekly review. That's what happened on Friday. I just can't think of anything else to say that I haven't said 5 or 6 times already. So with that, thanks for watching. And as always, thank you for your very, very kind support. Take care.